Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the Market Volatility Index, ticker symbol VIX. And so here I am recording this on Tuesday, August 20th in the evening after the market closed and the VIX closed at a price of 1588, being up almost 8.5% on the day. And so, that is this little green candle here. But the reason why I wanted to talk about the VIX is because that on the 5th, August 5th, when the market gapped down, the VIX went up from a price of closing on the 2nd at around $23.39. It spiked up on the 5th to a high of over $65, and that represented an almost 200% move to the upside, 181% move to the upside. So it can be a really nice way to hedge if one is going long on a number of stocks. Accumulating the VIX or an ETF that does track the VIX can be a very nice way to hedge in case we do see another gap down like this. But I also think that it is important to not be too hasty with this because, as we can see, it has faded down quite a bit. Coming from that close, we have seen a retracement of about 60% to the downside, so it can be pretty painful to hold after we do see a spike in the volatility. But once it does calm down, it can be a nice thing to accumulate. However, though, with the VIX, I believe, at least as far as I have access to it, this is only with options, so there is a time component to it. And because of that, it can be fairly risky. But there is another way to trade the VIX that is with shares, and so I'll go over that in just a minute. But I did want to go over the VIX chart here because of a very important level that can suggest that if we do cross it, that we will be seeing another move like this. And so that level is $20 a share. I've got this alert marked here so that when price does go above 20, I know that we might see a spike in volatility, because when we did cross over 20 on August 2nd, that was right before this massive move to the upside. So while we are down, we did hit a low of, let's see, 1446. We are coming up a little bit from that, not a lot. And so I do think this could be a very nice time to be accumulating for the next time that this happens, if it does happen. But I also think it's good to be patient, to pace oneself, because if going too heavy in something like the VIX, it can, really burn you because it does take its time coming down. And so one thing I wanted to show before I do go over this other way to trade the VIX, I just find this pretty interesting. I did draw this downtrend that we have been respecting as resistance, but we did recently break above it. So I think that we're kind of in this new market scenario where we might be seeing some more volatility. And also thinking about this going up to the high of 65.73 on August 5th. If we do look back in time, this is, March 2020, we saw a massive spike in the VIX going up to $85.47. So, of course, that was a pretty big move, and it wasn't, super quick like the one that we just saw. That represented an upside move of about 525%. But the important thing about that is that following that big spike, it didn't just come straight down. There were other spikes that followed it. And so that is the scenario that I think we could be in moving forward. And part of the reason for that is if I do flip over to the SPY, the S&P 500 ETF tracker, we did recently put in all-time highs on July 16th, hitting a high of $565.16. We are getting pretty close to that level now. However, after this big move that we have seen from the 5th, from that gap down day when there was a lot of panic in the market, we have not reclaimed those prior highs, and the spinning top doji really that we see here, this red candle with a big wick to the upside and a big wick to the downside, that could be a topping signal suggesting some indecision and that we might be seeing a pullback. Also, as the price has been going up in the SPY, the volume has been coming down. And if we do not get up to these all-time highs and we do get a retracement, I could potentially see this being a head and shoulders pattern. But if we do surpass these all-time highs, one thing that might happen, it's not clear yet, is that if we don't hit a higher high in the RSI, currently at 61.75, if we don't go higher than the values that we saw over here up to about 82, if we don't go higher than that in the RSI when the price goes higher, that is bearish divergence. It suggests that the upside move is not sustainable and it will be pulling back. And that suggests that there could be a spike in volatility. So I do think that even if we get up to these highs, we could be pulling back. And if we don't get up to those highs, we could definitely be putting in this head and shoulders pattern. And that would suggest a break down to, I believe, around $462 or $453. I went over it in this video, so you can check that out if you'd like. But I am going to go over the UVIX, ticker symbol UVIX. And so this is an ETF that tracks the VIX, but this can be traded by buying shares. So one does not need to take on the risk of buying call or put options. One can just buy the UVIX. And this is a 2x long VIX futures ETF. And so I have just recently started to accumulate this on the way down. It hit a low of $4.02, currently trading around $4.50. So it's pretty cheap per share, although I should note that this ETF does on occasion do reverse splits. This was a 1 for 10 when price was trading around $30 a share. So if price does come down to around $3 for the UVIX, it's possible there will be a reverse split. So it might be a good idea to be trading in increments of 10 in case there is that 1 for 10 reverse split. So it's not a headache dealing with fractional shares or whatever. But, I just wanted to go over this because if we look at the second, when the VIX crossed over to 20, we can see this big green candle. The UVIX went up almost 50% on the day, and then it spiked up on the 5th. And so from that close on the second, we can see that price went up about 90%. So a pretty nice trade, but that was accumulating after the spike up. And so if one would have been accumulating when price was down here, maybe getting an average right around $6 a share, that would have represented an over 200% move to the upside. So, whether or not the SPY, the stock market, hits new all-time highs, regardless of that, I think it is a good time to slowly be accumulating the UVIX for the next time that we do get a spike, because from, let's say, the close of today at 443, it's pretty reasonable looking at this chart to think that could go up 100%. And so I think that is a really nice way to hedge. Even if we don't get a big move up to the upside, that would be about a 350% swing to these prior highs. Even if we just get up to around $9 a share, $9.50, that represents an over 100% swing. So a great ETF to slowly accumulate and then have, a limit sell order set at whether it's 100% swing to the upside or maybe 50%. I think going higher than 100% is potentially being very greedy, because just like when we looked at the VIX in the past, the following spikes weren't as high. So that might be the same scenario with the UVIX. And so I could see it swinging this for 50 to 100% as being very reasonable, slowly accumulating this as a hedge. Very important that this is not something to YOLO into, to go all out on, because it could fade a lot more as it has in the past. But I think that the market scenario that we are in is that we hit all-time highs and that we are at the beginning of a bear market, and so there will be bear market rallies. And it's great to capitalize on those on the upside, but it's also great to hedge with the UVIX for the potential downside, as that does track the VIX without the risk of options. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.